Companies slash thousands of jobs amid AI push. Global workforce faces major shift in 2025. In a growing sign of global economic transformation, several of the world's biggest corporations, including Amazon, Nestle, UPS, and Target, have announced tens of thousands of job cuts as they accelerate their shift towards artificial intelligence and automation. According to verified data from Reuters and other major financial outlets, the layoffs represent one of the largest corporate workforce reductions since the post-pandemic recovery, driven by weak consumer demand and mounting pressure on executives to deliver returns on their multi-billion-dollar AI investments. Amazon, the e-commerce giant, has confirmed plans to eliminate up to 14,000 corporate roles, primarily within administrative and support divisions. Reports suggest total reductions could reach as high as 30,000 over the next year, as the company integrates AI tools to streamline logistics, marketing, and cloud operations. Nestle, the world's largest food company, has announced 16,000 job cuts in Europe, citing restructuring and digital automation. Similarly, UPS continues its downsizing that began early in 2025, affecting nearly 48,000 positions, particularly in management and logistics planning. Industry experts say this wave of layoffs marks a new phase in corporate restructuring. While past job cuts often targeted factory or retail positions, this time companies are focusing on white-collar roles, marketing, finance, and human resources, where generative AI and predictive analytics can now perform repetitive decision-making tasks. Executives are under growing investor pressure to prove that the massive spending on AI systems is producing measurable efficiency gains. A recent KPMG survey found that 78% of U.S. executives feel pressure from boards and shareholders to demonstrate cost savings through AI deployment, with average corporate AI budgets rising to $130 million for 2025. Economists note that these cuts come during one of the most uncertain labor periods in years. The United States government remains in a partial shutdown, delaying official labor statistics, leaving markets to rely on private estimates. Analysts warn that the layoffs may be early signals of a broader economic slowdown. Adam Sarhan, CEO of 50 Park Investments, told Reuters that mass layoffs rarely happen in a strong economy, suggesting that the move towards automation is not only technological but also cyclical, reflecting weaker business sentiment. Target, which recently installed a new CEO, plans to reduce 8% of its corporate workforce while testing AI-driven analytics tools in marketing and inventory. Meanwhile, companies like Procter & Gamble and Carter's are cutting hundreds of roles as part of cost control strategies linked to tariffs and supply chain costs. The broader corporate theme is clear. Executives are betting that AI can replace certain layers of management and middle office work faster than previously expected. However, not all economists agree that AI is the main culprit. Indeed Hiring Lab's Alison Shrivastava cautioned that while automation has the potential to reshape employment, much of today's downsizing still reflects post-pandemic corrections in tech hiring and global cost discipline. Still, the pattern is striking. Across the U.S., more than 153,000 jobs were announced for elimination in October 2025 alone, the highest one-month total in over 2 decades. In Europe and Asia, similar trends are unfolding as corporations restructure to offset declining consumer demand. The Financial Times reports that major private equity firms like Vista Equity Partners are reducing staff and reallocating capital towards AI-based portfolio management, underscoring how automation is reshaping not only labor but also investment strategy. Experts warn that as current trends persist, 2026 could see the most dramatic redefinition of white-collar employment since the 1990s. While AI promises long-term productivity gains, the short-term human cost is evident: shrinking payrolls, lower hiring rates, and growing anxiety among knowledge workers about their job security. As governments debate policies on AI regulation and worker reskilling, economists stress that adaptation, not resistance, will determine which industries thrive in this new era. In the words of one analyst quoted by Reuters, AI isn't taking everyone's job overnight, but it's already changing what those jobs look like. From logistics to law offices, the 2025 AI transformation wave is reshaping the modern workforce at unprecedented speed. The next 12 months will reveal whether this technological gamble leads to greater efficiency or a deeper divide in the global labor market.